Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. We are going to cover one we've covered before on this channel. It is August 22nd, a Tuesday. We're going to take a look at Best Buy. This is out of the consumer discretionary sector. It's a retailer, and let's jump right in. So if you want to know more about this company, check them out at their homepage, www.bestbuy.com. That is www.bestbuy.com. That is where I pulled this information from. At Best Buy, our purpose is to enrich lives through technology. We do that by leveraging our unique combination of tech expertise and human touch to meet our customers' everyday needs, whether they come to us online, visit our stores, or invite us into their homes. We have more than 1,000 stores and about 100,000 employees in the United States and Canada. So a lot of locations, you've probably seen them. You may have shopped in their stores. They are a electronics retailer primarily. Some of the items that they offer: laptops and computers, TVs and projectors, video games, Apple products, tablets, PC gamings, and virtual VR. Right now we're into virtual reality. Headphones for those music lovers out there, major appliances, your kitchen appliances, small kitchen appliances, cell phones, cameras, sound bars, smart home security devices, as well as your Ring doorbells and that sort of wearable technologies, floor care and home air quality, toys and games, cars, electronics. I didn't even realize they still sold this. Most cars now come with their own screen and their own electronics, but they probably still do have some of the older ones that do not. Health and fitness items, home and outdoors, right? So your grills, personal care and beauty, video and streaming media players, electronic transportation, so it looks like chargers if you've got an electric vehicle, and baby care, right? Baby monitors, that sort of thing. So really just all everyday electronics needs of every shape and size for your homes, for your office, for your wearables, for your business or your office space, right? And again, www.bestbuy.com is their homepage. This is out of the consumer discretionary sector. Let's keep on rolling here. And the reason we're looking at them, big drop today, 5.88% drop today. We are talking about Best Buy, ticker BBY, again out of the consumer discretionary sector. Closed out the day at $74.24 per share. 52-week range as low as $60.79, as high as $93.32. So not quite up against their 52-week low, but definitely leaning that way, especially with the drop today. And like I said, big drop on the day. Anytime I see a drop that big, I'm going to check them out, especially one that is on my watch list, and Best Buy is on my watch list. Average volume of 2.2 billion today, 3.2. Big drop off in the beginning of the day. Looks like they leveled out midday, and a little bit of a drop off there. Overall, down over 5%, almost 6% on the day. Market cap of 16.2 billion, a beta of 1.55, so they are more volatile than the overall market. Price to earnings PE ratio sitting at $12.56 per share, pretty low. Earnings per share, very nice earnings per share here, $5.91 per share. Earnings date August 29th, so coming up next week, might want to watch that. Forward dividend $3.68 with a 4, and this is a quarterly payer with a 4.68% dividend yield. Very nice yield on this one. Ex-dividend date was June 14th. Looks like they paid out July 6th, so you would be in line for the next dividend if you were to buy them now. And according to Yahoo Finance, a $79.61 projection speaks to a bit of upside in the stock price appreciation here as far as Yahoo Finance's forecast, but not a lot. Now, I like to look at statistics, drop down in statistics, looks at dividend splits. We're going to look at dividend yield theory. We look at their 5-year dividend average, 2.98. We compare it to their current 4.68, or right here, 4.68. Same, they call it the forward annual dividend yield here. It's the same number. And if it is higher, which it is, that speaks to some undervaluation. And this one is considerably higher, so considerably undervalued, at least according to dividend yield theory. Now, payout ratio is another one that I like. 75% or less is what I'm looking for. This payout ratio is sitting at 60.24, so this meets that criteria too. So very nice dividend payer here, very high yield, low payout ratio. Not super low, but again, anything under 75%. Anytime you get over 75%, I start to worry if the dividend is safe. I also like to look under financials. You can find a lot of useful information here. You can find their balance sheet, their income statement, their debt to equity ratios, assets over liabilities. Are they paying down debt? Are they reissuing debt? Are they buying back shares? Or are they issuing shares? Here you can see free cash flow is another one that we like to look at. You can do a lot of things with free cash flow. One of them is paying the dividends. You can pay down debt. You can reinvest into the company. You can make acquisitions. For us, we want as dividend growth investors, we want growing free cash flow because we want growing dividends, and free cash flow is where the dividends is paid out of. So I want you to notice a couple things here. They are repurchasing stock, which is good. That means you are more of an owner the more that they buy back, regardless of if you buy additional shares or not, you own more of the company. And their free cash flow. So 2020, 1.8 billion. 2021, big jump up to 4.2. 2022, I want to focus on this for a minute because it's going to look like a big drop, but this is going to be a bit misleading. That's why you want to look at all the numbers overall. See where they're repurchasing stock here. 1 million here, 312,000 here, and 3.5 million here. So a big jump up in repurchasing the stock, but a big drop in free cash flow. Well, a lot of that drop can be accounted for with the repurchase of the stocks here. So I do not mind free cash flow being a little lower, which it is in 2022, but the reason it's lower is because they repurchased a big block of their own shares. I am fine with that if that's the reason, right? And then 2023 so far, 894 million here, and they have already repurchased 1 million of their own shares. So this is overall growing free cash flow. Even though you're seeing a drop from 2021 to 2022, it can be accounted for right here in the repurchase of their own shares. So that is very nice to see. Very nice numbers overall. Very nice dividend yield on this one. Let's keep going. So stockanalysis.com is another one that I like to look at. I'm not affiliated with this one either. Just always recommend more than 2 sources so that you can back check the information that you are getting is accurate. So stockanalysis.com is one I like, and Yahoo Finance is another. You pick any sources that you like. Just make sure that you're looking at more than one so you can back check the information and make sure that it is accurate. And I like this one because they have some stock analysts that have taken a look at this, 13 stock analysts to be accurate. They call it a consensus hold. I would say maybe we watch for more of a drop in this one. They do have a low estimate of $70, which would be a 5.72% decrease from where it currently sits. They have an average estimate of $78.08. That would be a 5.12 or 5.16% increase from where it currently sits. And if it happened to hit their high of $88, that would be an 18.52% increase in the stock price. All the while, you could collect that 4.6% dividend yield where it currently sits, at least if you were to buy them now. Now you're going to find a lot of the same information, actually the same information. They do go back a little bit further here under the financials, income statement, balance sheet, free cash flow, all that information. I like to look under statistics, and what I'm looking at, a lot of good information here as well. They look at their EPS forecasts, their revenue forecasts. One of the ones that I like to look at is how efficient is the company, and to do that we look at return on equity, ROE, and return on invested capital, ROIC, and I like 10% or better on both of these, and the return on equity on Best Buy is 46.1%, very, very nice, and very, very nice return on invested capital as well, 20.60. Both smashes the number, over double, over four times for return on equity and over double for the return on invested capital that I like to see. Very nice numbers overall for this one. Let's keep going. Payout ratio, as we saw before, we're going to look at the dividends real quick. Payout ratio, as we saw before, in the 60s, 62.37% is what they're saying here, under 65%, again, under the 75% that I'm looking for, and very nice dividend growth, 13.92%. So not only do you have a high starting dividend yield on this one, you also get to pair that with very nice dividend growth, 13.92%. Very, very nice to see. Overall, we went back to June 10th, 2020, 55 cents. They raised it up March 2021 to 70 cents, raised it up again March 2022 to 88 cents, and then just raised it here this past March up to 92 cents. And if they were to keep it going, I would project out that they would raise it again next March in 2024. So a very low payout ratio, very nice dividend growth. Overall, the metrics on this one look very attractive. The only thing you probably want to do on this now, get into the financials a little bit more if you're interested in this company. Make sure that their revenue is growing. What are their forecasted outlooks looking like? How are they doing for store sales? Are they building more? Are they closing stores? You want to look at all that information for retailers. How are they doing for online presence? What are their sale breakdowns, online versus in-store? One increasing? Are they both increasing? Is in-store sales declining? All that information is pertinent. You want to make sure you understand what the value of the business is well. So you could, a lot of different ways you can do that. Discounted cash flows out there, sites that you can use to help you out with that as well. But understand how much the business is worth and what you should be paying for it if you are interested in this one. This one is on my watch list. I would need to look to see what my value is for it. I have not done that yet. This is the vested interest stock screener. This is how I set up the videos as well as how I look at a business to see if I am interested in investing. If it meets the criteria, 4 of 7 for companies that are not financial companies, 5 of 8 for companies that are financial companies, even though you can use price to book for any company. So really 5 of 8 is what I'm looking for. Then I will do a deeper dive on the company and see if it's investable. You can run through this at your leisure. Well, that is it. That is Best Buy. Trying to keep these ones relatively short, trying to find value in the market. These are supposed to be quick hitters here. Let me know what you think of Best Buy in the comment section down below. Do you shop there? Is it one in your video? Are you looking to buy on this big pullback on the day? Over 5%, almost 6% pullback on the day. Very, very nice to see a pullback and a company that I'm looking to buy. Now I just need to make sure that it's in the value territory that I want it to be in. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on the Vested Interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this that we're watching or that we're buying or that we're avoiding altogether. We cannot benefit from each other's investing, but we can benefit from each other's experiences, right? Good or bad. You know, I'm going to make mistakes. You're going to make mistakes. That's okay. The best investors in the world make mistakes. I think I was reading there, one of the best out there said if you're right, you know, half the time, you're beating the majority of the best investors out there. He really only counts to be right about 2/3 of the time or less. And that is on the high side. So don't let the fear of making mistakes keep you from investing in the market. We're all going to make mistakes. Just learn what you're supposed to from the mistake and try not to make it over and move along with your day. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have some companies or stocks you'd like me to add to the Stock Pick of the Day series, and I'll work them in the rotation, go ahead and drop them down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select the criteria, or seek the advice counsel of a certified financial advisor.